Welcome to today's Corporate Venturing Insider podcast. Today is going to be very special. I have Hoolie from Coinbase Ventures with us. Hoolie, welcome.
Thank you.
Let's talk about Coinbase Ventures, but first about you.
Sure.
What was your journey into corporate venturing?
Sure. So I never woke up and said, I want to be a corporate venture capitalist. That wasn't on the career board. And maybe I can back up into how I got into crypto. So I'd done a bunch of things in the past. I was at Bain in the private equity group. I was the guy raising my hand saying, are there any cases that are more like frontier tech, like autonomous vehicles, crypto, more bleeding edge technology related work? And that naturally led me into traditional VC, Coinbase Ventures, which was founded by Ev Williams, the co-founder of Twitter and Medium. And really by accident, I was there during the 2017 crypto ICO boom. And so every VC in Silicon Valley was trying to figure out this crypto thing. And just by accident, I happened to know the most about Bitcoin and crypto. I did my graduate degree at MIT. And when I was there, the school actually had a digital currency initiative where they airdropped Bitcoin to students. And I was one of the people that didn't claim it and then saw my friends going on expensive vacations the next year. And that triggered me like, what's this Bitcoin thing? I should probably understand it a little bit more. But while I was there at Obvious, it was a great experience. Got to meet, exceptional founders across all types of frontier tech. And I came away with really few takeaways or long, deep convictions. There were a couple secular technology trends that were going to matter for the next 30 years. One obviously was, at the time, it was machine learning before it was branded AI or AGI.
Yep.
2 was crypto. And 3 were things in bio and computational biology, CRISPR, things we could go there. So if I thought about those 3 and I said, crypto is the one that interests me the most and where I know a little bit of finance, I have a computer science background, this is a space where I can have an edge and just be valuable. And I just started getting obsessed intellectually with crypto, helped work on some investments there. There were a bunch of Bain people at Coinbase. And so just naturally was talking to those Bain alumni and just had a chance coffee chat with a former colleague. And a week later, I was meeting Emily, our COO, and Sean, who's now our chief business officer, and just shipped and went in. I didn't know what I was signing up for. And so I joined Coinbase all in on crypto. I joined as the corporate development and ventures team. So we can get into kind of the origin story of Coinbase Ventures and how it's evolved. But I've worn different hats over my time at Coinbase across M&A, strategic partnerships. But for the kind of back half of my tour of duty so far, have been leading our venture investing arm.
I like the way you mentioned tour of duties because it feels like you have a very rounded background. You've done a bit of finance, a bit of technology, but you did MIT, so you're clearly technology biased. I want to talk maybe about this technology bias because crypto is super technical. It's all about math at the end of the day. How much of that influenced you as an investor?
Definitely a huge influence. I got into crypto because of the cryptography. And reading the Satoshi white paper was this unlock moment. I was dreaming about what this meant and the implications, and just knew in my gut this was a transformational thing for the world, and went deep on the history of the previous attempts at digital cash and cypherpunk forums. And it really is remarkable how much of a breakthrough Bitcoin was. But yes, being tuned to cryptography and the math was a big part of intellectually what got me interested. But it's evolved a lot since then. And now we're finally at a place where we're seeing internet scale applications are possible. So being able to kind of go all the way up and down the stack was pretty important as well.
But I still want to go back to your story because you're in Coinbase in corporate business development. And did you have the idea of the corporate VC? Did it come from someone else?
Yeah, I'll give you the whole origin story of Coinbase Ventures. It really started as an experiment. And I think this is a testament to the culture that Brian, Emily, the original kind of co-founding group around Coinbase have really instilled with the company. It was just action creates information. It's okay to just try things. So when I joined, Coinbase Ventures was a blog post that said, we are Coinbase Ventures and here's some investments we've done.
Internal blog post?
External. Hello world, Coinbase Ventures, we're open for business. There was no real plan. There was no real structure. But I think just strong intuition from Emily and others that this was an important vehicle initiative to have as part of broader Coinbase. And I think what was been unique about Coinbase is it really has been a platform in an emerging ecosystem. And so it started very organically with hey, we have exceptional Coinbase employees who are going off to start things. Like, we want to be able to consolidate how we support them and back them. We had the traditional VCs on our cap table who are active in the space, sharing new startups with us that were super interesting. And so it started very decentralized, and there's about a dozen folks across the company, all just working on it nights and weekends. It was no one's full-time job was to be doing Coinbase Ventures. But it snowballed from there, and we ended up investing and helping seed this ecosystem. That was the other, like, the mandate was very simple, was back exceptional founders. We all have this conviction that we are in the early innings of an emerging ecosystem. We don't have to be overly prescriptive on like short-term ROI necessarily. We know that intuitively, by like helping seed and grow this ecosystem, it's going to benefit the broader category and eventually benefit Coinbase's business as well. So fast forward to today, we've done over 600 investments.
I mean, 600. When you started in 2017?
2018.
2018, okay.
Yeah.
Okay, 600.
And basically along that journey, Coinbase, the investment started really working. I think everyone internally started seeing that there was a lot of just strategic value. And so we put more energy and structure around it. And now we operate very much like a traditional like Series A fund. We invest off the balance sheet, but with like dedicated investment capital. But the mandate has stayed the same. Extremely broad, anything that touches blockchains and blockchain technologies in our remit.
Web3?
And Web3, anything that's being unlocked, and kind of anything, except the through lines are like exceptional founders, big ideas, potential to grow the crypto economy and the space. And so early on, that was a lot of things like new decentralized finance primitives, protocols, L1s, L2s, like infrastructure type stuff. Now, today, given how much crypto has gone quote unquote mainstream, is like we're getting pulled by the market into much more traditional fintech looking businesses, right? Because stablecoins are everywhere and getting permeated everywhere, going deep on like exchange and market infrastructure type things. So the things we look at and invest in, like the universe has grown. And so the lines are a bit blurry. And stepping back, like, yeah, so that's the origin story, and it's evolved, and now we're one of the most active investors in the space. The portfolio has yielded not only like financial ROI, we are financial ROI first in how we underwrite things, but there's just a ton of intangible value. And I think of it, it's almost like a relationship farm system of great founders who are doing exceptional things. Sometimes that can turn into an M&A conversation. Sometimes that turns into BD conversation, but we don't go out we're very founder first. We don't go out with that being the first order reason to invest. We get excited about it like a classic, like early stage investor.
Yeah, it sounds like it. I think there are a few things I love, but the fact that you raise your hand when you saw this blog post and you say, I want to join in. The second part is exceptional founders, which includes Coinbase employees decided to start something.
Yeah.
And Cisco does that, for example, but very few firms actually are comfortable investing in people leaving their firm. Can you speak to that? Because I think that tells a lot about Coinbase mindset.
Yeah, it really is this, like, we don't have this zero sum mindset. Like, we don't want to be encouraging people.
Yeah. I don't think you want that, right?
Or, being a contributor of attrition. And so when someone has gotten to that place internally of like, I want to burn the ships and I'm going to start something and I'm going to be a founder, like, of course we want to be the first person they're talking to and support them on that journey.
That's amazing. Now, of course, early stage, meeting founders, getting a sense whether they're exceptional or not. Can you speak to a few things that you see in the founders? After 600 investments, you start to have a pattern recognition. You start to see, I thought they were exceptional, they were not. I wasn't sure, but they are exceptional. Is there a few pattern recognition you have now when you meet someone and you're like, this is the one?
Yeah. The biggest thing is intrinsic motivations. And I like to say we look for missionaries, not mercenaries. So it's true of all tech hype cycles, but especially true in crypto because you have these price runs and it's a very cyclical thing. You get a population of builders who are clearly more short-term oriented and more on the mercenary side. And then you get the really exceptional folks who are pattern matched to Brian Armstrong and are thinking on like a 30-year time frame and really want to build something enduring that will exist and persist long beyond them. And that's like the number one thing. And then second thing is, are they swimming in like an interesting vein? There's a lot of incremental things versus really like step function improvements. And probably the third is like compound learning and just like slope versus intercept, right? So when someone is starting out on the founding journey, do you see that they'll grow because the person you're investing
Exponential
in on,
compounding.
right? Like that growth mindset, because the person you're investing in at the seed cannot be the same person who's going to be at the Series C or launching a public protocol or taking the company public. So those are some of like the like softer founder feel type things.
Now, part of the softer part is sometimes you have mercenaries, very smart mercenaries that can disguise themselves as missionaries. You probably now start to have a sense of which one is which. Can you share a little bit of the way you distinguish between the two?
Yeah, it's hard to like say like blanket, but you can observe just in general like how folks are communicating, the timelines they're thinking about, revealed preferences from certain decisions on how they are structuring their company, how they're thinking about team construction, how they're thinking about co-founder dynamics, and you can tell who's really like all in for a long-term journey versus very short-term focused.
Now, if I think about 600 investments, to me that sounds like very high bandwidth, very low latency type of activities. Let's talk about speed first. You must be able to move fast. Can you talk about the design of Coinbase Ventures and how it evolved over time, where you can actually really go with that type of conviction very early before it's obvious and yet be fast?
Yeah, we've evolved a lot. When we first started, we were doing pretty high velocity, 100K, 200K checks. We typically knew the founder, had some connection with them, whether they were at Coinbase or just like a known quantity through our investor network. Now where we are, we run multiple strategies. So we still do these like higher velocity, we would call like ecosystem checks, which are geared towards like pre-seed and seed. But we spend most of our time and energy is more in 1 to 5 million, 2 to 5% ownership, like deeper diligence underwriting, and we've gotten more concentrated. So the early days, I think a lot of our speed came from, we were in this distributed, decentralized model, and there were like a dozen folks around the company who were championing and like empowered to propose and do investments. We dialed the amount of rigor based on like what stage we're talking about, what strategy we're talking about. But yeah, maybe does that answer your question?
To some extent, but I think you're talking about it was decentralized, then there was maybe a committee, or maybe it was not the right word to use, but you kept speed no matter what. How did you ensure speed, the sense of urgency, the action bias?
I don't know if there's any magic thing we did other than like that is just the DNA of the entire company. There's always a focus on cycle speed. The space moves so fast, so we have to keep up with it. And then from a decision-making perspective, I think we're very much on the side of like, we don't do decisions by consensus. So we want contrarian views. So if 5 folks on my team are a hard no on something, but one has done the work and has done time and knows everything and is pounding the table, it's going to happen. And that's part of the dynamic there.
What happens if everyone agrees it's obvious we should do it?
Sure, we're gonna do it probably try to size up.
And have you ever done a retrospective where you look at which one turned out best between the ones where most people said no and where everyone agreed?
Yep, just like a traditional fund, we run through our portfolio like twice a year, and we do that kind of retro. And so that's where pushing the thinking of, okay, is this really like a step function, or is this an incrementally better version of what we've already seen comes into play?
And so are you saying that you always want a step function? You talked about exceptional funders, exceptional outcomes. So is step function one of your criteria?
Yes, it's one of the criteria. We frame every investment memo with a section of like what you have to believe for a 10 to 100x outcome. And that can be super crazy, moonshot, like there's so much execution risk, but like you have to get to a place where you can see that there is that type of like asymmetric outcome, and different people have different beliefs, but we try to harmonize on like a core set of beliefs. And I'll just make an example. If I believe that crypto wallet adoption is going to increase 10x and every crypto wallet is going to need a fiat on-off ramp, and the existing fiat on-off ramp players are ill-suited to serve that, okay, this startup that is that has a unique insight on how to serve that. Like I guess the way to say it is the belief sets are hijacked for top-down TAM thinking. So instead of, hey, this is the entire world of wallets today and fiat on-ramp flows, it's more of a way of articulating like, okay, the market doesn't exist today, but if you believe these things, it will be a large market. We don't always get it right. And so like example where we didn't get it totally right in 2020, 2021, some of our belief statements were around developer tooling for crypto. We made a bunch of investments in that category. What in hindsight was wrong about the belief statement is that the tooling actually just embeds into the existing developer workflows. Like if I'm going to GitHub, I don't need a GitHub for crypto. I'm just going to go to GitHub, and I'd rather have the appropriate repos and tools like embedded in there. So we don't always get it right, but it's a framework to forecast the future.
It's interesting because you say forecast the future, but the way we think about it at TDK Ventures is we dream different scenarios, positives, negatives, but we call it backcasting from there, looking at what's missing. And then we found the founders who are building towards that future. And of course, we want to dream different scenarios which are uncorrelated. And what you do is you have this vision of developer tools in a certain way. If it happens, great, you back the founders that build towards that.
Yeah.
If it doesn't happen, then that's venture capital.
Yeah. That framework makes a lot of sense. The thing I'll say though overall is like, I think we all have the humility that we're just not the smartest people in the room. And so we always have this running motion we call like majors and minors, where every quarter we pull up and everyone picks a few themes or categories where we think like, okay, what's the next 4 or 5 years look like? Where are the gaps? And that kind of similar thinking of like, okay, if we find someone, like let's find someone who's doing exactly this, which is I think a good way to have like a prepared mind. So when the founder walks in the door, like two years ago, we did a similar exercise for prediction markets and came to like, okay, if we find someone who's doing exactly these 3 things in prediction markets, like we want it. And we found that founder, we invested in them. And someone's going to change your mind because they have an insight you don't have.
And you have to be open-minded to that. I want, especially for the audience who are not from the US, I feel like there is a golden nugget when you say major and minor. Can you speak to the discipline of having major and minor?
Yeah, I think if you take nothing else away from how we operate, it's that nothing is rigid, and every 3, 6, 12 months, we're constantly rebooting, refactoring like our frameworks and how we operate. It just have to stay agile, and it's a compound learning thing as well. But majors and minors, we went through different phases of like, okay, should we have like structured practice areas and individuals and pods that are just focused on stablecoins or just focused on L1 protocols? And I've come to a belief that you just have to be a generalist like in our space, and the mandate already has some bounds. So within that mandate, everyone has to be a generalist, and then the topics and the things you need to be smart on are constantly evolving to stay with the market. Yeah. So we do have folks who like have gone super deep on DeFi, decentralized finance, like that is their major. If there's a DeFi project on the desk, like definitely want their opinion, but they also should have a list of areas where like I'm spending time in agentic payments and AI tools, or I'm spending time in stablecoins. So everybody kind of cycles through their list. It's a forcing function, not get complacent and not get too rigid.
I love it. That is a golden nugget. Let's speak to your team. How is it structured? How many people, different functions?
Yeah. So the core ventures team today is 8 folks, and it's a bit fluid, but we've got 4 folks on the direct investing team, 2 folks who are focused more on portfolio ops platform, and 2 folks who are more focused on liquid strategies. And that's tied to like managing our portfolio, but also making net new investments. We're very embedded. Basically, I'd call it an orbit of another dozen to 2 dozen individuals whose their day job is to be out and talking to companies. So we've consolidated the check writing decision process into one unit, but the sourcing, what's interesting for Coinbase, what could be strategic, like that goes out into a broader Venn diagram.
I can imagine the audience listening to 8 people call 600 investments since 2018. It's just amazing. So how do you track all these investments?
Yes. I start shouting out folks on the team, and I give a lot of credit to Brandon, who leads all of our portfolio tracking and ops.
No, I meant really, how do you make sure you support the ones that you want to support in the right way and engage the superpower from Coinbase?
Yes. Yeah. Our model's always been, we want to be pull, not push with founders. So part of our like kind of message to founders, like, we're not going to get into the guts of how you run your business, but we are here as an API into Coinbase. And there's a shorter list of like more concentrated investments where we are hands-on, where we will take like board observer seats and be there as much as the founders want us to be or need us to be. Beyond that, it's we're the API to Coinbase, and you tell us when you need help. We'll plug you into all our products and ecosystems, and there's plenty that we're pretty hands-off. And when the founders tell us they need something, we'll activate.
Very nice. I think part of it is Coinbase DNA. Part of it is deep respect for the founders, but can you speak and maybe give the case for why the pull versus push for corporate VCs? Because I think that's something which is so important to get right. And beyond what Coinbase is about, there's probably something fundamental here.
Yeah, and I think this is where, candidly, I think a lot of corporate VC arms stumble a bit. We just approach it really from first principles and from like a founder first mentality. And I'd say like, I think like Coinbase Ventures, the manifestation of it is really like, what's the version of a corporate arm on the cap table that Brian would have wanted, right? Basically, if I'm like a top tier Silicon Valley founder who has like all types of access to capital, why do I let this corporate on? And why am I going to give them control? And is it competitive? Are they trying to just brain drain me? Like, and so we try to isolate that and just say like, we're here to support you, and we'll be as involved or not involved as achieving that is. But having that just like founder first mentality, I think it's just worked well in getting onto the cap tables that we want to.
Now, there's one thing which maybe is actually more fundamental than I thought. You mentioned ownership between 2 and 5%, which is not typical for early stage VCs who would want probably 10, if not 20%. But I think there's a strong reason why 2 to 5%.
And that's just like I'm throwing that out as like a rough heuristic for the investments and deals where we spend a lot more time. But structurally, we're not set up to take board director seats. So we have a preference to fall behind a strong financial who will do the governance work and the control work and be involved. And we have that trusted relationship. That 2 to 5% zone just slots really well in like a collaborative model.
So there's something, so we are at GCVI Monterey today. I just finished my opening keynote, which was about the yin and the yang, where I think that the best cap tables are VCs and CVCs together, bringing different discipline and different value. What you're talking about is you're the CVC bringing superpower from Coinbase, where you love to work together, leading, co-leading with VCs.
Absolutely.
Can you speak to the value of that? Because I think it's fundamental for bringing the full system of value to the entrepreneurs.
Yeah, I 100% agree with that. And the way I think about it is, from the founder's shoes, is how am I leveraging my cap table as a strategic weapon, right? And so it's a similar concept of like, okay, if I'm in a space, in like a novel technology space, like I probably want like power angels and early movers in that space to be on board and affiliated. I think a traditional VC, a corporate VC, the right corporate VC, angels, they all can bring different and complementary things. And with our model, we don't have to be super greedy about ownership if the sum of the parts is going to set up this endeavor for like optimal success.
The way to think about it is, if you have the financial ROI, it means you bet on the future makers. Who are the people you want to work with anyway at Coinbase? So can you speak to the reporting line? Because it feels like you're intelligence gathering about the future, where Coinbase could go or decide not to go. How does the reporting line work, and how do you share these insights in a way that's effective?
Yeah, that's a great question. And we're very careful about, I'm not going to take an investor update and just like forward it to a product leader and say like, hey, here's all the guts of this company. But we do regular sessions with all the product leaders and the executive team of like, here's what we invested in, here are the things. And so it's just a very organic conversation and kind of back and forth.
I think there's something that comes across everything you say, which is humility. Can you speak to why this is so important for investors?
Yeah, I think the core of the humility is having real empathy for that founder journey, because founders, they are the lifeblood, they are the catalyst. We can have a million ideas and we can see where trends are going, but the intercept of that exceptional person who is going to go and just chew glass and burn the ships, and it's a crazy leap for someone to make. that's where the humility comes from, because just knowing that it comes down to that co-founder early team group. And so we just have a lot of humility about the journey they go through.
I love it. I think this is the best place to end this interview. Thank you so much, Hoolie.
Thank you.
Thank you.